If you're self-employed and you've either been told you can't buy a house or been denied by a lender, or you're just nervous because your income isn't traditional, I want you to hang with me for a few minutes because this is one of the biggest misconceptions in mortgages. Being self-employed does not mean you can't buy a home. It usually just means nobody has explained to you how lenders actually look at your income. And honestly, once you understand that part, this process becomes way less intimidating. I'm Mike Hengy. I'm a mortgage broker licensed in Arizona and Indiana, and I help self-employed buyers get pre-approved all the time. Contractors, business owners, freelancers, consultants. This is a very normal part of what I do. Let's start with the biggest myth right away. A lot of self-employed people think because I own a business, lenders won't approve me. That's not true. The loan programs are still the same: conventional, FHA, VA, and non-QM options. The difference is simply how your income gets documented. That's it. And this is the most important part that people misunderstand. Lenders are not qualifying you based on what you say you make. They're qualifying you based on what can be documented and proven. That's where self-employed borrowers sometimes run into frustration because your actual cash flow and your actual tax return income look very different. Being self-employed doesn't disqualify you. It just changes how income gets reviewed. So how does this actually work? Most conventional loans use what's called a 2-year average. The lender looks at your net income from your tax returns over the last 2 years and averages those numbers together. Now, here's where things start to get interesting. If you're self-employed, there's a good chance your CPA has spent years helping you legally reduce your taxable income, which is smart. You write off mileage, equipment, your home office, meals, and business expenses. That helps reduce your taxes. But then you go and apply for a mortgage, and suddenly the lender looks at your tax returns and says, okay, based on this, here's how much income we can use. And now you're frustrated because you're thinking, wait, I deposited way more than that. And honestly, the frustration makes complete sense. This is the single biggest disconnect I see with self-employed buyers. Your tax strategy and your mortgage strategy need to work together. The more aggressive your write-offs are, the lower your qualifying income may look on paper. If you're self-employed and this is already helping things click a little more clearly, go ahead and subscribe. My goal is to help make this process feel understandable, not overwhelming. This is one of the biggest pieces of advice I give self-employed buyers. If you think there's a chance you'll want to buy a home in the next 12 to 24 months, talk to your CPA before filing your taxes, not after, because there's a balancing act here. The more income you write off, the lower your taxable income becomes, which can also lower how much house you can qualify for. And unfortunately, a lot of people discover this too late. They file 2 years of tax returns showing very little income. Then they try and buy a home and wonder why the approval is difficult. Now, to be clear, I'm not saying you should overpay taxes unnecessarily. I'm saying your tax strategy and your home buying goals should be aligned. And here's some good news. A lot of banks will never explain this properly. Lenders can sometimes add certain expenses back into your income. Things like depreciation, mileage, home office deductions, they're called add backs. And a good mortgage broker knows how to properly analyze those. Good planning before filing taxes can dramatically improve your mortgage options later. Another question I get consistently is, how long do I need to be self-employed before I qualify? The standard answer is 2 years. That's what most conventional lenders want to see. But there are exceptions. For example, let's say you were a W-2 electrician for years, then started your own electrical business. Even though the income structure changed, your actual experience didn't. And some lenders will absolutely consider that. This is why blanket internet advice gets people in trouble, because every situation's a little different. Now, if you've been self-employed for less than a year, traditional financing can definitely get tougher. But there still may be bank statement loans, non-QM options, alternative documentation programs. 2 years is common, but not every self-employed situation fits perfectly into one box. Now let's talk about something that can be a huge solution for self-employed buyers: bank statement loans. And honestly, most big banks either don't offer these or don't explain them well. Instead of using tax returns, the lender looks at 12 to 24 months of bank deposits. That's what they'll use to determine your income. This is huge for people with strong cash flow, healthy business deposits, but a lot of write-offs. I had a client here in Phoenix, a contractor who was self-employed about 6 years. His tax returns showed around $60,000 after deductions. 3 lenders told him, sorry, you don't qualify. But when we reviewed the 24 months of business bank statements, the actual cash flow told a completely different story. We structured a bank statement loan, verified deposits properly, and he closed on a home in 28 days. Now, the trade-off here is important to understand. Bank statement loans usually carry a slightly higher interest rate, but for many self-employed buyers, it's the difference between buying a home and sitting on the sidelines frustrated. Bank statement loans can solve income documentation problems when tax returns don't tell the full story. Let me simplify the documentation side because this is where people often feel stressed. For a traditional self-employed mortgage, expect to provide 2 years of personal tax returns, 2 years of business returns, and some occasions you'll need a year-to-date profit and loss statement and bank statements. For bank statement loans, usually 12 to 24 months of consecutive bank statements, all pages included, sometimes a CPA letter. And here's where people accidentally create problems. Things like large, unexplained cash deposits, mixing business and personal spending, sloppy bookkeeping. These things can slow a file down quickly. You don't need perfection, but clean documentation matters. Clean financial documentation makes the mortgage process dramatically smoother. Now let's talk specifically about Arizona for a second. One thing that's actually helping buyers right now is we're not in that crazy frenzy of a market anymore. Homes are sitting a little longer and sellers are negotiating more. For self-employed buyers, that matters because you usually need a little more planning, a little more documentation, and sometimes a little bit more strategy. You're not trying to rush through this in panic mode. You actually have time to get organized with your documents, work with your CPA, understand your options, and structure things properly. And honestly, Arizona has a massive self-employed population. We have contractors, real estate investors, freelancers, consultants, and entrepreneurs. This market is full of people just like you. A calmer market gives self-employed buyers more time to structure things correctly. Let me leave you with the biggest thing I want you to understand. If one lender told you no, that does not automatically mean you can't buy a home. It usually means that that lender couldn't structure the loan properly for your situation. That's a huge difference. As a mortgage broker, my job is to understand your income, understand your documentation, and match you with the lender or program that fits best. Sometimes that's a conventional loan, sometimes FHA, VA, bank statement, or another type of non-QM option. And honestly, a lot of self-employed buyers feel discouraged before they even talk to the right person because they assume something's wrong with me financially. Usually that's not the issue. Usually it's understanding how to present income correctly. Self-employed buyers don't need perfect tax returns. They need the right strategy and the right loan structure. So if you're self-employed, trying to figure out what you qualify for, how lenders calculate income, or whether buying a home is actually possible for you, don't guess. Get clarity first. Because once you understand how this actually works, the process gets a whole lot less stressful. If you're self-employed in Arizona or Indiana and you want to understand what you actually qualify for, drop a comment below, send me a DM, or go to levelupmortgage.net. I'll get back to you personally. And if you know someone who's self-employed and has been told they can't buy a house, share this video with them, please. Because in most cases, they can. They just need the right broker. Comment plan, and I'll send you my free 90-day homeownership game plan. If you own a home or are thinking about buying one, this channel was built for you. Getting a mortgage should not feel this complicated. But for most people, it does. Too many options, too much jargon, and lenders who are not always working in your best interest. You end up making one of the biggest financial decisions of your life, feeling like you're flying blind. Not sure who to trust, not sure if you're getting a fair deal. I'm Mike Hengy. I've been an independent mortgage broker for 14 years, and I've helped over 1,000 families buy homes, refinance smarter, and make decisions they actually feel confident about. I work for you, not a bank. That means I shop dozens of lenders to find the right loan for your situation, and I walk you through every single step in plain English, so you always know exactly where you stand. Here's what I want to do for you on this channel. Every week I break down mortgages in plain English. Buying, refinancing, move-up strategies, market updates, and the mistakes that cost people thousands. No fluff, just the information you actually need to make a confident decision. Mortgages made clear, confident, and simple. That's what this channel is all about. If you're ready to take the next step, the description has 2 free guides. One's for buyers, and one's for homeowners that are thinking about refinancing. Start there, it's free, and it takes 5 minutes. And if you want clarity every week, subscribe. I'll see you there.